Hi everyone. In this session, we are going to discuss about multi-fund accounting in Oracle Fusion Accounts Receivable. I have divided this topic into different sections. First, we will understand the concept. Then we will understand the receivables accounting flow for an AR invoice. And then we will execute this multi-funding process in the Fusion instance. I'm switching to the concept tab where we will discuss on the concept of multi-funding. Multi-funding is a feature in Oracle Fusion Receivables. The effect of multi-funding, right? At this point, we need to understand an AR invoice. AR invoice is a document that gets created to invoice the customer. When customer buys an item from an organization creates an AR invoice and sends to the customer, so he has to pay that. So see, take an example of we buying an item from Amazon. When we buy an item from an Amazon, item will have a price, and when we add it to the cart and we do the checkout, right, then a tax will be applied on top of it on the item price. Let's say item price is $100, then there will be a tax of $3 or $4 on top of it, and then there will be shipping charges for that item. Uh, right? So there are three components. One is item cost, actual item cost, and the second one is the tax which applied on top of the item cost, and the third one is the shipping charges. So the AR invoice will consist, the item cost will come under revenue. It will be revenue for the organization, and tax and freight lines is nothing but the shipping charges. So when we create an invoice and do the accounting, there will be four lines. The first line will be receivables, which is a sum of item cost, tax, and shipping charges or freight that will be debited. And these three lines, revenue, tax, and freight, these are nothing but item cost, tax, and then shipping charges. These accounts will be credited. So AR invoice will have four entries: receivables, revenue, tax, and freight. And this multi-funding, right? This multi-funding future will determine the accounting combination for receivable account. These are four different accounts, and this feature will determine the accounting combination for receivable account. Coming to the next point, source of determining the accounting combination. The accounting combination for revenue, freight, tax lines in AR invoice are used as source for determining the accounting combination for receivables. We will understand it in detail. In the next tab, I have given the actual examples where you will get even better understanding of what I'm talking about. And coming to the usage of this feature in Oracle AR, multi-funding is primarily intended for public sector clients. When you say public sector, it may be a government organization. In public sector, the balancing segment values typically represents a fund. Multi-fund accounting enables the public sector clients to account for AR transactions as transactions for single specific fund, like unlike transactions traversing balancing segments or creating intercompany lines. Yeah, this is a bit confusing, but you will understand it better when I switch to the next tab. I gave some examples of how the funds will be in a government organization. Let's like maybe airport fund. Let's say government of a country or a state, it will have airport fund, education fund, healthcare fund, housing fund. These are some of the examples. This feature will facilitate identification of invoices and receipts separately for each fund. When we apply this feature in AR, and when all the invoices and receipts are created, we can categorize the invoices and receipts based on the fund once this feature is enabled for a public sector organization. So here in this session, right, we won't enable funds. We will use only a corporate ledger having multiple legal entities. We will treat each legal entity having different company code as a fund, and then we will proceed with our demonstration. I will switch to the next tab where we will see in detail how accounting will be for an AR invoice, and we will understand what will be the change when there is no multi-funding feature and when there is a multi-funding feature applied. Let me switch to the receivable accounting flow tab. Coming to the receivables accounting flow, right? Uh, Now the first section is we are talking about the scenario where in an organization in account receivables multi-fund accounting is not enabled, it is disabled. In this scenario, if we create a AR invoice and save it, it will create the distributions. The distributions will derive the accounts either from transaction type or from supplier side or from different sources which are defined in the auto accounting rules. And from based on the auto accounting rules, if they are set up based on those setups, it will derive the accounts for receivable account, revenue account, tax and freight accounts. And these are derived at that after we save an AR invoice. And after that, if you do a draft accounting or post to the journal from actions of AR invoice, subledger accounting uses the draft distributions which are created in the previous step as they are. It will not change them. The code combinations, right? The company codes of revenue, receivables, and tax and freight accounts will remain as is. If the company codes are balancing segments of the revenue account and receivable accounts are different, in that case, SLA subledger will accounting will may create intercompany lines. Intercompany lines will be created only if the balancing segment values of revenue and receivables accounts are different. So I have kept an example for us to better understand this, right? What we have discussed. Let us take an invoice. Let's assume we have created an invoice and saved it. And it will, from the auto accounting rules, it will derive the receivables, revenue, and tax accounts. And let's take this scenario, right? Where the balancing segment value for receivable account is 101, whereas for revenue account it's 102. These two are different, right? So when actual accounting is done by SLA, it creates two more entries, intercompany payables and intercompany receivables, so that it balances the balancing segment entries. Here, if with these entries, 101 is not balanced. Let's say if it is for $100 and this is for, let's say this is for maybe $100. The company code level at balancing segment level, the amount has to be balanced. With this, it won't be balanced. It will create the ARs, right? Let's take this is $90. This is $10, and receivables is $100. Then the amount for balancing segment 101 is $110, whereas for 102 it is $90. They are not balanced, right? Uh, so they has to be balanced. Then because of to make that balanced, SLA will generate two more entries, IC payables and IC receivables. Intercompany, it uses the intercompany setups and generates these entries so that it balances at the balancing segment value level. Let us take amount. It is $100, 90, 10. Then IC payables, then it will be $110. IC receivables, it will be $90. That way, at balancing segment level, for balancing segment 101, we have debit of $100 and there will be a credit of $100 again. This is 100. this will be debited, this will be credited, this will be credited, this will be credited, this will be debited. So for 102 balancing segment, there will be $90 amount which is credited and $90 amount which is debited. So the net change in 102 balancing segment will be 0. Similarly, for 101 balancing segment, there will be debit of 100 and there will be credit of 110. Then yeah, it will be 110. So that's how it will create the, I'm saying the example, we will see in the instance the actual flow, right? This is how it will create. This is how system will behave if multi-fund accounting is not enabled. Let us assume multi-funding account is enabled. In this scenario, we'll create an AR invoice. Then when we save an AR invoice based on auto accounting rules, it will derive the distributions for receivables, revenue, tax, and freight accounts. And subledger overrides the draft receivable distribution using the revenue, freight, and tax distributions. Final accountings are created. Intercompany balancing lines will not be generated. So what we are trying to say is, let's take the same scenario, whatever we discussed. Receivable have balancing segment 101. Revenue line is having balance segment as 102. If multi-fund accounting is enabled, the balancing segment value of revenue will be copied to receivables. And then this also, when actual accounting is generated, the receivables balancing segment will get changed, and there is no need to create the intercompany lines because the debits and credits will get knock off. Even to keep it better in this scenario, I'll make it 102, right? Even here it's 102. That way it will be easy to understand. Then let us take it is $90, it is $10, it will be $100. We'll say it amount. This will be debited, credited, right? Now then again it will be $100 amount. When actual accounting is created, it will be $90. It will be $90. This will be debited. Next two lines will be credited. So for balancing segment value 102, the debit is 100, debit amount, and credit amount is 100. So this balancing segment value got balanced, and there is no need to generate the intercompany accounting. That is the net result when we enable the multi-fund accounting. Now I'm moving to the execution tab. Here we will discuss what we are going to do in the instance and see whatever we discussed. We will do that in the instance and we will verify. Let me switch to the execution tab. Here first we will create a AR invoice and we will review receivable and revenue code combinations. And if we need a scenario where the balancing segment value of receivable and revenue account are different. If they are not different, we will modify the auto accounting rules and transaction type to ensure that company code, which means that balancing segment value is different for revenue and receivables account. Then we'll create another invoice and create the draft accounting, and we'll verify the intercompany accounting lines getting generated. After that, these 4 steps are when there is no multi-funding is enabled. Right? Initially, multi-funding is not enabled, and we will do these steps and we will see that intercompany accounting lines are getting generated. After that, we will enable the multi-funding and we will create another invoice where the balancing segment value of revenue and receivable accounts are different, and we will see that it doesn't create the intercompany lines. but it copies the balance segment value of the revenue account to the receivable account. Yeah, that is what we are going to execute in the instance. So I'll switch to the instance. I'll create the invoice first. We'll create the invoice under US1 business unit. Bill to customer, let me give you the value which I copied. I'll take any random memo line. Quantity has 2. Now we will save the invoice. Once we save the invoice, the distributions will get auto created based on the auto accounting rules. And if you click on here, we have option edit distributions. It will show us a warning message. We can say yes. Now, if you see, we have a receivable account and we have a revenue account and we have tax account. And all these accounts are having the same balancing segment value, that is 101. So this won't work for us. We need a scenario where the balance segment value of receivables and revenue accounts are different. To get such situation, these accounts are coming from auto accounting rules. So we'll go to the auto accounting rules, we will review the auto accounting rules and we will update them. Okay, so let me go to the auto accounting rules. I have copied the invoice number. Let me navigate to the auto accounting rules. Let me go to the setup and maintenance. Query for auto accounting rules. Manage auto accounting rules. We are working on where we have created the invoice for US1 business unit. So let us search for US1 business unit. We want the balancing segment value to be different for revenue and receivables accounts. So we will change the balancing segment value for revenue account. If you see, for receivables account, balancing segment value is 101, and even for revenue account, it is 101. So I will change it to 102, and do you want to continue? Yes, I want to continue. Even they are different at a revenue and receivables level. I have saved the changes. Now I will create another invoice. And we will see the distributions now. US1 business unit. We have taken the customer, the memo loan is quote fee. We'll take 2 quantity. Let me save it. Go to actions and view distributions. If you see here, the revenue accounting balancing segment value changed to 101 as we have updated it in the auto accounting rules. So now the balancing segment value of receivables account and the revenue account are different. Let us close it. And if we even, let's again review the distributions one more time. And if we see here, we have receivables account, rounding distribution. This is of $0. Like this is only, there is no meaning for that as of now. Revenue, we have receivables, revenue, and tax, right? There are no intercompany lines in the draft accounting that got generated from the auto accounting rules. Now we will perform the actual accounting. We will do it in the draft. First, we will complete and review this invoice so that status will get changed from incomplete to complete. And now we can do the draft accounting. Let us do the draft accounting and we will review how the actual accounting is getting changed. Let's click on view accounting. Yeah, if we see now, receivables it's 157, revenue 150, and remaining is tax amount, right? And it has created two intercompany lines whose amount is same as revenue amount. This is what we discussed even in the Excel. IC payables, intercompany payables and intercompany receivable accounts will get generated. This is how the process works when multi-fund accounting is uh, future is not enabled for the business unit level. The balancing segment value at the revenue account is not copied to the receivables account. Instead, it created intercompany lines to balance the amounts at the balancing segment level. So that is what we even discussed here, and we have done these 4 steps, right? And now we will enable the multi-fund accounting at feature at business unit level, and we will create one more invoice and we will try to see that. But we will face a challenge, even I'm letting you know in advance, which I will let you know what is the prerequisite, and we will take it up later in the next video. Okay, let me continue and update the multi-system option at BU level. Now click on setup and maintenance. If system options, manage system options, for functional area receivables, manage system options. Yeah, let me check that. Yeah, the navigation is manage receivables system options. Let us search with that. Manage receivables system options. Click on manage receivables system options. Let us search with US1 business unit. Click on US1 business unit. So here under accounting section, we have enable multi-fund accounting. This is the feature where how we will enable this multi-funding feature at BU level. So if we click on it, it is showing us an warning. This option enables multi-fund accounting on all business units assigned to the ledger US primary ledger and can't be reversed. Do you want to continue? So the thing to understand here is when we enable this feature, this gets enabled at ledger level, even though we are doing it at BU level. For this BU is mapped to US primary ledger, and there could be multiple BUs under the same US primary ledger. So if we enable it for one business unit under a primary ledger, it gets cascaded to all the business units under that primary ledger. That is what this warning is message is trying to convey us, and it is asking if you want to continue. If we click yes and click on save, yeah, we got an error. The error says you can't enable multi-fund accounting because one or more business units associated with this ledger assigned to the business unit have existing transactions. So it means that to enable this feature under a given primary ledger, there should not be any transactions created in AR for any of the business unit. Let's say there is for under US primary ledger, there are 10, if there are 10 business units, there should not be any transaction created in AR application for all these 10 business units. But we are doing this under US1 business unit, which there are hundreds of transactions created. That is the reason system is not allowing us to do that. So going back to our Excel, the prerequisite we need to understand is for to enable this feature, there should be no transactions created under any BU under the primary ledger to enable multi-fund accounting feature. There should not be any transaction created. So to execute and for me to execute these next steps to enable this feature and then create another invoice and show that the balancing segment value of revenue account is getting copied to the receivable account, I need to create one primary ledger from the scratch. Like I need to create a altogether new primary ledger and associate it with a legal entity and then create a business unit under it where it is a fresh business unit and there is no AR transactions under that, and then I can perform the next step 5, 6 and 7. So I will stop this video. We will consider it as part 1 of multi-fund accounting. I will work on creating a new primary ledger, business and legal entity, and I'll execute the next steps. Yeah, thank you. Even I will this Excel, right? I will attach it as an attachment on our master Excel of Fusion Financials under AR tab in column C or D, right? Where we are capturing everything, all the setups and whatever we are discussing in multiple videos. We are trying to club everything into one Excel, which we can use it as a master Excel. So I'll attach the other Excel as an attachment here, and once I'm done with all other videos, I will give this Excel and whatever the material that I have used in those videos as links in the description of all the videos. Thank you.